Good morning. It's Jonathan Barratt with the this morning's debrief. It's March the 1st, and yeah, it was a shortened February, obviously, but I think March is going to prove to be quite exciting. Obviously, today, the most important, we've got the RBA statement, see what they move on interest rates. Remember, Glenn Stevens, the governor, Reserve Bank governor, said that normal rates for Australia should be around about that 5%. So the market is actually anticipating an increase of 0.25% today. So let's see how that unfolds. That announcement comes out later this afternoon. Just to get our minds into the market, let's have a quick look at the latest, which provides a brief summary of what occurred on Friday, just to get us into the mood. As you're aware, the Dow was down 18 points at 10,383. The S&P was up 1 and a bit at 1,104, and the Nasdaq was up 4. Moving across to Europe, similar story across in Europe, but a little bit more positive. The DAX was up 44, the FTSE was up 76, the DAC was up 66, and the CAC was up 68. That's the Stoic was up 44. A couple of interesting bits of news. Buffett sees US housing recovery by 2011, and he actually believes it makes sense to become involved in real estate over there at the moment. That's probably not a bad thing. And I guess the other most important thing, I guess, is coming to do with copper at the moment, which we're focusing on. Obviously, Chile in itself provides a lot of copper, and I guess the concern is that the cuts in power and also the fact that some of the refiners are also down, that's the oil refiners, will fail to provide energy to a lot of these Chilean mines, and as a result of that, we might see an early spike in copper. As to whether or not it will continue is another thing. I personally feel that it does look okay for entering into copper, regardless of what happened in Chile. But I still think that copper in itself remains relatively robust. Other main bits of news there, I guess the employers probably cut more jobs in February amid labour market struggles. That still is a concern. This week we do have unemployment in the States. The market will be widely focused on that to see what does occur in that space. But we would like to see some little bit of growth there occurring. So, so it could be quite interesting. Let's have a look at some of the other markets, some of the softs and some of the energies and the base metals. Okay, let's first of all start with the currencies. And if we can have a quick look at the dollar index. The dollar index from last night started the dollar on a weak note. That's something we had noted a little bit because we are still long Aussie. A little bit weak at the moment, and I think that US 80 is a formidable target. It also provides us with good support. So if anything there, let's see. But this is not it's a very hard market at the moment. I would anticipate that the dollar will remain range-bound, but at the moment testing the lower end of its range. You can see that by just having a look at the Aussie, which is one of our favourite positions. The Aussie in itself has had a good night. I think you can buy dips back to that 89 level, and if it takes out 88, well, I'm wrong. So I think you've got a good low-risk opportunity to add to positions. That's what the chart looks like, and as you can see, over the big range, when you look at 93 at the top, 86 at the bottom, we're mid-range, but at the moment, I think that we like it, particularly, let's see what the RBA does today. And if they do move on rates, then the chances are we'll see that Aussie up a little bit. If they don't, completely different story. Okay, just having a quick look at what's happening in the Eurozone in terms of currency. And as we do, we start with the daily chart and work our way through. The Euro's on a slow, had a little bit of a bounce last night, and it has been a trend that has started and been in place for a long time. Probably expect to see some good support around that 134, 135. 136 level, and as a result of that, would not be surprised to see that euro just up a little bit. Dips back to that level, I think, can be certainly looked at as an opportunity. I'm wrong if we break through 134.50, and happy to be wrong if that's the case. Low risk trading opportunity. Just remember, we're 136, 137, top end of that range is 145, so we're at the lower end of the range. Okay, just having a look at the energy sector. Having a look at crude. Crude in itself is looking for some very positive numbers, particularly out of the States in terms of unemployment. So let's see what happens. But a very strong move last night, and I think dips can be supported. And I wouldn't not be surprised to see it test this top end of the range up to this 82 level pretty soon. Obviously, we just got to take out this top end trend here, and if we do, then I think it's quite solid that we will see it trade higher. But I'd like to see some unemployment number there really help that out. Having a look at the copper, this is a trade that you know, we have been focused on, not just in the wake of what's happened in Chile, but overall, I think that looking at this chart here, it does look quite positive for a move higher. And I'm just trying to get this daily chart up so we can actually have a good look as to what you can see, because copper in itself, in the wake of some fundamental stories, is starting to look quite good. There it is now, and certainly bounced off these major lows here when we thought it should have retrenched back to that 250 level. Okay, that's looking at the copper market. Let's have a look at the local market, see how that'll move and shake this morning. And that's it there. Local SPY. Look, the market closed out 46.19, a little bit better bid than offered, and obviously interest rate movements today will be a key factor as to what actually occurs there. But at the moment, I think the market's saying, well, look, we've come back for a little bit of a correction here, and let's see how that unfolds. We've broken that trend. It does look as if the market wants to take it lower, but I think back to that 4,500, if that is the case, will probably represent a good area to have a look at it. So I don't mind actually going long at that level. And let's just see that hourly chart. A little bit slow in coming up, but there it is there. Look, this looks quite good, all quite stable, but as I said, any dip back to these levels I'd certainly look at. A break through that top end range, a break through that high of 4625, and then she will trade higher, onwards and higher. Okay, just quickly looking at some of the ones, particularly wheat. Wheat in itself had a relatively strong night on Friday night, and there it is there, nicely testing the top end of the range. And I think if we take out that area at the top, which is that 510 area, then I would not be surprised to see it start to really have a good move to the top side. So quite comfortable there. You can pretty much see the similar stories occurring for corn and also for soybeans. So in that sort of thing, I think that we can probably edge our way back into some of these markets. I know we've been out for the last week or so, but at the moment I'm preferring wheat over a lot of the other ones. Okay, well that's pretty much about it for today. As I said, the most important data we've got is the RBA, their movement on interest rates this morning. The current rate we've got on interest rates at the moment is 3.25%, and chances are that that will move higher. 3.75%, and the market's looking for a 0.25% there. That's about it from us. Hope you have a great day, and we'll talk to you tomorrow.